their production services have been deteriorating. Actually, they started deteriorating before the counties came in place. After the counties came in place, they completely deteriorated. And farmers have challenged in terms of access to information and knowledge. And this is actually well demonstrated even in the productivity levels. If you look at cereal productivity, for example, the cereal productivity for Kenya has stagnated for decades. For pulses, it's been trying to improve, but for root and tubers, again, it's been coming down. So the challenges that farmers go through is that they need to invest in technology. They need to invest in, just improve seed, use for fertilizer, improving agronomic practices. But they face these challenges in terms of access to credit. And I have to say that, especially for the smallholders, they really try. There is a huge demand from farmers to get credit. Unfortunately for us, because there is a credit constraint, or they're actually constrained by the formal credit systems, farmers end up relying on the informal credit systems, where the interest rates tend to be very high.
Right.
So this actually creates a trap whereby farmers want to borrow to invest, but yet they end up borrowing from very expensive sources, and actually to the extent that there's a lot of even phobia for formal credit sources, even when they actually try. On the other hand, I believe that formal systems, and I think I want to refer to a study that was done by the Kenya Bankers Association last year, that was looking at what they can do to actually improve lending to the ag sector. Currently, formal credit only lends about 4% of the formal loans that are given out to agriculture. And yet, even for this 4%, it only goes to the large-scale farmers.
Right.
So for the formal credit service providers, they require a lot of data. They need data on trends, the level of productivity, so that they're actually able to calculate the risk. This can only be done if there is public sector investment, because it's the public sector that will invest in data generation. It is the public sector that will make this information available, because if a private sector invests, there's no way they're going to share it with their competitors.
Right.
So this has to be done as a public good. Yeah.
But as you saw, even in the budget, the investment, or rather the budget allocation to agriculture came down.
Sure.
Yeah.
Yeah, we are talking about an allocation of around 48 billion this year. That's quite low. But Njagi has put it rightly. We need to see more private sector, because government is just a catalyst.
Right.
So they just catalyze, and then the private sector should be able to thrive. So what we are seeing in the market, some innovations out there. We are seeing leveraging on platform, things like platforms, where the platform can, through approach like the one that we call the connected farmer approach, where in a platform the farmer can receive say information on good agriculture practices. The farmer can be able to access information on the market, where to sell their produce. At the same time, the farmer is able to build his credit score over time. The credit through financial literacy modules that are on the platform that are offered to smallholder farmer, usually in groups for the small holding. Then it's learned over time, then the farmer is able to build their score, and they become bankable, or what we call lendable, for lack of a better one. There are various innovations like that in the market that are coming up, but as Njagi is mentioning, they are just littered, they are very small. But we need to see a replication of that more. We at Microsave, I think we're in this sector, and we are trying to see how we can replicate it through a model we call acceleration or incubation of these ideas, where they come together, and we bring the entire society, the entire country, or the entire sector, to understand that these small things that are happening here in small pockets, they can be replicated and be profitable or benefit a farmer, so that they are able to build their profile and be lendable. Sure.
All right. This agriculture sector in Kenya, it has quite a huge potential. We are yet to even meet the demand, and we can be in a place where we are food sufficient and even export.
Yeah.
So the problem is, where is the problem?
So the agriculture sector actually in Kenya, we face a myriad of challenges. But I think the key important ones that can help us move towards the transformation that we have actually desired is that we need to focus on productivity. The way we focus on productivity, we need to make sure that our farmers have the right technology, they have the right inputs, and they also have the know-how on how to apply these inputs. When it comes to the risk that is now becoming more and more in the sector, there is need to provide insurance. We have one of the, I think, very low penetration of agriculture insurance. The Ministry of Agriculture has actually been piloting agriculture insurance, and currently it's being offered as a subsidy, whereby the ministry co-pays with the farmers to actually demonstrate. But the challenge is that we need to improve the system. For example, the way it works is that so like this year we had a challenge in the rainfall. So when the farmer makes a loss, the insurance comes at the end of the season and compensates. But there are some instances where the insurance can actually remedy the scenario before. You don't have to wait for the harvest. And a good example is that this year when we had the onset of the rains, most farmers planted, and then the rains dried up, and the crop of course dried up. And then most farmers actually had to go back and buy seed. At least for some farmers, actually they had to buy both seed and fertilizer. But then where does the farmer get that money? If you're going to borrow and you're getting, because on average the informal credit charges something between 75 to 100%, it's really expensive. The other thing is that when you look at the model of agricultural lending, it cannot be the same as people in industry or in employment. So we have to find innovative ways where we take into account the peculiarities and the uniqueness of the ag sector and provide loans that are actually suitable to also incentivize the farmers to want to come for credit from the farmers market. And when you look at the interest rates that are being charged, I mean, there's a huge potential even for the private sector to make money by reducing the market share for informal lenders. But of course, we don't want to say that informal lending is bad, because they actually step in. For them, they're also in business, and they are addressing a gap that has been created in the economy. So the key thing is to how can we make this work. The good thing is that there are models that can work, and for example, if you look at the model that was in Asia during the Green Revolution, the government actually used the informal lenders to lend to farmers, because the key challenge for informal lenders is in the information asymmetry. So it's very expensive for them to collect information, as Julius mentioned, that will help them determine the farmers that are lendable and to the amounts that they can actually provide them with credit, able to pay. So that assessment of the ability to repay for farmers is very expensive, because you need a lot of information. So we need to learn also from what other countries have done, and especially how it has worked for them, and see what we can borrow and apply to our situation.
Even as these farmers borrow this money and they put it into the farm, of course their produce comes out, and it needs somewhere to go for them to make money and make a profit and repay those loans. So access to markets has been a big challenge for farmers in this country.
Sure. And for sure, it's something that is, because it's causing what we call the post-harvest losses, and the post-harvest losses is one of the main challenges the farmers face here, because they harvest at the same time, and then all of a sudden we have a glut in the market. There's nowhere to sell, there's no formal way to store that for future sale, and they end up into losses. We've seen the government is trying to get some investment into that. Recently a law has been passed, like the Warehouse Regulatory System Act of 2019, that is going to build into something for, especially for the cereal growers, where now they can store their maize. They don't need to panic sell when the prices are low. Then they can wait until the price is high, and they can sell at better prices. We have seen other private sector led models, like what we have seen with Twiga Foods, the connected using the blockchain, where the farmer already has a market in end when he's going to prepare the land. These are some of the models that are being, but they are small scale, but they have a future to be scaled and give potential to the farmer, especially in the rural area, to benefit from that. Because what we have seen, even things like losses, the losses, the massive losses we've seen where a farmer harvests and then you hear the entire crop was lost out of aflatoxin, or the cabbages were rotting in somewhere, or tomatoes were just given to animals. All those, they are grim pictures that paint, and even the youth, they are not even willing to get into agriculture. Very an important aspect that we should be focusing right now, because we've seen what the economy looks like, and we will continue having more youth in this country. Yet the age of an average farmer is between 50 and 65, which is worrisome with our life expectancy being around the same. So we need to focus more on how we can bring youth through these innovations.
Okay. Before we discuss how to bring the youth into agriculture, what are your views on the issue he's talked about, the market access for farmers?
So, yeah, the market access has always been a challenge, mainly because our market systems, especially in agriculture, tend to be informal. So one of the opportunities that is actually out there is how we can develop the structure, how we can structure the market, basically making them more formal. So I think, as Julius mentioned, the warehouse, the passing of the Warehouse Receipt System Act now is a plus, and currently there has been a lot of discussion on the commodity exchange. So both, when they are used together, I think it's something that will help structure the market. And we just need to look at what happens to key export commodities like tea and coffee. So basically, the way you would expect a structured market to work is whereby the commodity exchange will help predict prices, so that we can actually tell what will be the price of a commodity even 6 months into the future. You have the receipts bill, the receipts, the certified warehouses, whereby farmers are actually given receipts that are tradable. So this actually can even help farmers access credit. And then, once the commodity exchange is able to work, you're able to develop a clearing system, so that you can actually bring like an input seller, you can bring a credit provider, you can bring the seller or the trader together into the system, so that actually when a farmer takes credit from an input seller, for example, the system will be such that the trader will pay the input provider the amount of credit and pay the balance to the farmer. And the farmer will actually make decisions, because more informed decisions, because you're able to predict prices. So that actually helps you to determine the level of investments, and you're able to calculate your return. So the commodity exchange bill is being discussed. I think there's already a committee in the Ministry of Trade. But beyond that, I think it's very, very important to sensitize farmers on how this thing works, how they can use it to actually make money, because I think that is the essence of what he mentioned about farming as a business. And what other players within the value chain needs to do, and what roles they'll play, so that when the system is being rolled out, then we'll have less of misunderstanding or using the word cartel, because I think that has been mainly used in agriculture markets. But actually, when you look at even the aggregators, they actually play a very important role, because they're able to bring volumes and look for, they actually help collect volumes for the big buyers. But of course, they tend to benefit more, so that's why they are quickly labeled to be cartels. I think the other thing that I also wanted to highlight is that in the 70s and the 80s, we had farmer cooperatives that worked quite well. Of course, there is in the 80s and 90s, most of the cooperatives collapsed, but we have examples of a few cooperatives actually that have been resilient, and they operate, and they're actually very efficient. So we need to find a model for bringing farmers together, or building up strong farmer associations, especially for the smallholders, because for the large farmers, they have no problem, because they have the volumes, and actually they can attract market. But for the smallholders, if you are doing the small farm and your yield is not much, you actually need to aggregate for you to be able to negotiate better in the market. So the way the agriculture market works is that people who have volumes actually get the first go. They get to even dictate the prices. And this cuts across almost all agricultural value chains. So we have to find a way of how we can organize farmers better, how we can build or sustain governance, good governance in farmer association, whether it will be through, again, maybe we need to revise the Cooperative Act as it is. It has a lot of loopholes, and that has enabled people to run down cooperatives. Or if we find another model that we can actually bring farmers together that can work for different commodities, then that should actually be pursued.
Right. Even as we work towards bringing farmers together, of course, we are looking to even have export this produce that we have. And a lot of export from Kenya has been in raw form as raw materials, and then we import the finished materials. What is the place of value addition in even building the life of that farmer, that smallholder farmer?
Value addition enterprises, and I'm calling them Agrifood SMEs in this sector. I think it's one of the things that we need to really focus on that, because we've seen in very structured value chain, the SME in the middle acts like a catalyst of the entire value chain, in that it connects backwards by providing the information. It becomes like the center of information, the center of where the market, the provision of the market, and also provide the value. By the value, I mean that when we have an agri-SME in the middle, it means that the farmer, when they deliver their produce, they are sure they are not going to sell in the raw state that they got it from the farm, but it's going to change, and hence the value where they are selling. And this is something that we usually talk about it and say that a value chain, as it means, there is value and there is a chain. So once there's no value in the chain, it means it's just a chain which can even incarcerate people and put them into jail. Just to change that, an agri-SME is very important. In terms of transforming what we are producing, we make better value, and the value goes to the market, brings more income to the smallholder farmer, and then they are going to benefit into other things.
All right.
Yeah, so I love to say that if you look at the current Big Four, even if you look at what is being targeted in agriculture, SME is a big thing. And actually this year, one of the things that Treasury was trying to implement was the credit guarantee scheme. Because again, even for SMEs, credit has been a major challenge. So I think it's important actually to track even the efforts that the government is putting in place, how they're actually helping to stimulate the private sector. But importantly, and this is something that any economist will tell you, is that if SMEs are driven by the private sector, there's a very huge chance of succeeding, because the private sector, they will make strategic decisions on where to invest, how to brand, and all that. I think most of what we've seen actually has been a response where if you look at key commodities like coffee, where public sector actually are trying to drive the value addition. And there's a lot of literature from many centuries back that actually shows that public sectors in business will almost likely end up in failure. So rather than being public-led, I think the key thing should be to create an environment whereby that value addition will be driven by the private sector.
Right. Is this one of the channels where we can now bring in the young people?
Sure. And I mean, we have seen, talking about the young people, the generation we are talking about a quarter of this nation being under 35 years. And the population reference bureaus, the World Bank, it shows that by 2050 this is going to double. So we are talking about 50% of the country being youth. We are seeing right now in the job market 750,000 youth people are getting out in the job market, and only 15% will get to the formal employment. So the rest,
where are they going?
They're just out there doing the blue collar, or totally 17%, as the statistics put it, they are totally not employed. But the fortunate thing that we have seen, even with the ones that are getting to the informal sector, 3 out of 5 jobs that they are getting into, they are related in agri. They are agri-allied jobs. Either they are doing some value addition, or they're involved in the transport sector, and or information. They are employed to do service and things like that. So there is a chance to create employment for the young people in the agri sector, and especially if we bring in these agri SMEs, because Agri-SME will not only bring the formal employment for the ones that have gone through the education system and finished the education system, but also even for semi-illiterate people, where the technical jobs that are required within the SME that are being set up, and also the connection between now the farmer and the SME, being the transport, be the auxiliary services that are required within the SME. That is going to spur the growth of employment within the ag sector. The other thing I would like to also put at that, apart from the normal formal and informal employment, we are seeing also opportunity for youth growing themselves their own jobs. When there is an SME who's supporting a certain value chain, and there's information that want to reach out to the farmer, we are seeing through the digital platforms that I talked about earlier, then the youths are able to, because of the digitization that is there in the country, they are able to uptake that and easily get into that and get themselves into employment, like passing information or formal using digital tools to collect data, or like we've seen some like ideas like Farm Shop, who are setting base and employing youth in rural areas to pass information to rural farmers.
Yeah. Njagi?
Yeah, so definitely there's a whole lot of opportunities for the youth to get engaged in agriculture, not just on the value addition side. And the example I have is that our university, Egerton University, partners with the nation every Saturday to produce Seeds of Gold. If you look at most of the people giving the stories there, majority of them are actually in the youthful category. I think the challenge that we've been having, especially for the youth, and bring them on board in agriculture, is that most of them have been constrained in the key factors of production. So if they want to farm, of course, you'll find that most of the youth do not have land, and our land policies are not promoting land markets. So what we have is there's a lot of land speculation. And of course, people who have money to spec in land tend to be older, much older. And then, of course, the other issue that has been talked about quite a lot is the age of the farmer. That most of the people in the rural areas tend to be quite old. I think the current age is about 50 to 60 years, depending on who you talk to. So the key thing is that if the land markets actually allow, for example, somebody to rent in land at a cheaper price, the current rental value of land is just exorbitant. And that provides us a very big disincentive even for the youth. And I can give you an example. If you look at, let's say, the maize areas, a large-scale farmer would be somebody considered to be doing about 50 acres and above. The rental value of land in the places where you can get a parcel of 50 acres, you'll find that it's between 10 to 12,000 shillings per season, not even per year. So if you're doing 50, that's almost $500,000, and you're paying upfront. And you need to buy seed, you need to buy fertilizer, you need to invest. So the capital requirement becomes very large. So I think we need to relook even the land use policy so that we kind of provide disincentive for land speculation and actually be able to pay for the factor. In this case, where you pay for land, what should determine the rental price should be, what you can get out of land in terms of fertility or that kind of thing. Even when you look at the SMEs that Julius talked about, most of them would require capital. And unfortunately, when you talk about capital and technology, you always think about importation of these technologies. You'll find that universities like Egerton and Jomo Kenyatta have a lot of technologies that are actually suited for use here. But there's again the challenge of information because of how the information gets to reach even people. So if we have a vibrant system where research connects to extension guys and you're connecting to farmers, then you're getting feedback on which technologies are being taken up, which technologies need to be revamped or to be improved, and basically you'll be churning out technologies that are very useful. And actually you can see the application even in whether it's production or value addition. And when you look at even some of the proposals, for example, I would point to like the Coffee Task Force report. Among the things that it was saying in terms of trying to bring youth to agriculture. They were looking at mainly like things like coffee houses, allowing people to roast coffee, you know, and be able to sell, for example, the way they do it in Ethiopia, that you don't necessarily need a chain or a coffee chain, a branded coffee chain. You can actually go and find that somebody has a small establishment, and basically this would work on referrals because people trust what you're selling. Of course, you have to do it in a safe way. That means that, of course, you have again to talk about food safety, because I think for agriculture, food safety becomes important. You have to guarantee that if I'm not in a formal house or a formal establishment, I can actually sell safe foods, and there's somebody who can actually come and verify and certify that, you know, or from time to time, that whatever I'm selling is safe to the consumers.
You've mentioned about the issue of food safety. Of course, there is quite some lack of integrity in Kenya. We just saw reports of, you know, meat that has been spiked with something. And what is the place of just being honest, doing honest business in Kenya? Just take that.
There is so much integrity, and technology is coming to help that, especially the blockchain technology, where traceability becomes a very important thing. And traceability is already the developed market. They have already adapted to that, and we're seeing even the modern Kenyan, they are also adapting to knowing exactly where did I get where is this food being sourced. And the incidents that you've even seen people raising, like this possibility of a dog meat in the market, human meat being sold in local market in Nairobi, vegetable from Siwa. I think that consciousness is already with the people because of the diseases that we've seen, the outbreaks of cancer and unexplained diseases here, especially in the urban sector. So to help in the traceability, that's why the model like what I talked about, the Twiga foods, which help to trace the food that you're consuming comes from somewhere. This is going to help and sanitize the agri sector, and these are some of the opportunity I'm seeing also, where the government should help to catalyze, and as a result, youth should also get involved in that, because it's technology based. You connect a farmer, you have the detail of what they're producing, when they're producing, when they're harvesting, and the person transporting from farm all the way to the market is known, and what time it arrives in the market, and the shelf life of that product is known very well. So when you're buying something from your supermarket or your duka close to your home, you're very sure this thing comes from farmer X or farmer Y, and I'm sure it was produced organically or not organically, on what basis. So you're sure and you're health conscious.
All right.
Yeah, sure.
I'll take that as your final comment. We've run out of time, but I'll give you 30 seconds to give us your final remarks.
So basically all we need is to develop standards and enforce them. I think for food safety, those are the two key things. So we have to develop standards. So we have to know how we package, how we produce. Information should be available. Traceability is something that, of course, we've been forced to get there. But the challenge also is that even if we develop these regulations and we don't enforce, I think it's not just in Kenya, but I think it's in the nature of the human being. We'll always try to cheat. So if there's laxity in terms of enforcement, then we'll always be having issues. But if we can strengthen the institutions in agriculture, in the Ministry of Public Health, or even in the veterinary services that are supposed to undertake the checks, I think that can actually help improve the integrity within the market system.
All right. Thank you very much, gentlemen, for that conversation on matters agriculture.
Thank you.
Thank you very much. That was Tim Njagi, a research fellow from Tegemeo Institute, as well as Justus Njeru, value chain specialist from Microsave Consulting, just discussing financing in agriculture and the ails that are making that particular sector not thrive. Now, that's all for Business Insight this evening. We value your company. Have yourself a lovely night.